always good to see a lot of people, when blockchain, cannabis, taking a lot of attention away from the mining sector. It's so nice to see a massive audience. Okay, so I'll start with the page of our disclaimers. Please take a few seconds to go through this. I am Sid, Head of Research at Fundamental Research Corp. We are the largest independent research shop in North America, having covered over 450 companies to date, about which half of which have been in the mining sector, the rest of which has been the real estate, technology sectors. What we really do is try to identify all these underexposed small cap companies that no one's really familiar with, and how investors get value from us is we put a third-party evaluation on the report. We discuss the company's business model through a third-party perspective. So as investors, you should be using that as a tool to make a decision for investment purposes. So let's see what happened before that. Let's get this going. I always start with this slide, wanting to remind investors how important it is to have a disciplined approach to invest in junior resource. By doing this, you can minimize a lot of your errors and kind of focus on the fundamentals and hopefully get a lot of winners your way. This is a step-by-step procedure we adopt at Fundamental. Basically start with the target commodity. We look at the outlook for that sector. Then we move on to the asset location, quality. Then, more importantly, we look at the management strength. Does the management have skin in the game? Who is supporting them in terms of institutions or insignificant shareholders? And in the end, we do our evaluation, compare that to the stock price, and that's how we come up with a recommendation on whether it's a good story to buy or not. All right. So these are the commodities that have performed well in the past 18 months. Cobalt, number one, $10 to $35, up to 50%. The second is zinc, up 100% from 70-ish cents to $1.55. Copper is up from $2 to $3.25, 60%. Gold and silver has been flat, but people have not been following the palladium market, which is up 100% in the last 18 months. So I know that in this room that each of you have different preference for commodities, different preference for stage, different preference for management teams. For what I'm going to do is discuss a few companies that we like in each of these sectors, and you as investors can just focus on the ones that you like, and then hopefully you can walk away with 2 or 3 big winners today. We think 2018 is going to be an overall good market for the mining sector. We try to keep it very simple. What's going to happen? Overall, the global GDP is expected to grow, which is from strong growth in US and India, offset by China, and a stable growth in the Europe. And more importantly, the second factor is we expect a small correction in the US dollar, which would result in higher commodity prices in 2018. So we think this year is going to be good for mining. All right, so the first sector is cobalt, which was the top performer, as I mentioned earlier. I have 2 stories for cobalt. Number one is Fortune Minerals. There are 2 advanced stage for cobalt projects, primary cobalt projects in North America. We like Fortune. Advanced stage feasibility studies done. They also have over 1 million ounces of gold with the project. Recently, they started updating their feasibility study, which is going to come out this year. So a catalyst for investors to watch out for. And they're also looking to bring in offtake partners or any financing partners to advance the project to production. Why cobalt? We're very bullish on cobalt because that's one of the few commodities that's driven by both supply and demand. For example, each electric vehicle needs 10 kilograms of cobalt. So by 2025, the forecast is you're going to have approximately 25 million electric vehicles on the road, which means you're going to see the demand of close to 200,000 tons of cobalt for batteries. Right now, the supply is only 50,000 tons. That's huge for the market, and that's why the demand is pushing up cobalt. And on the supply side, half of it comes from the DRC, and most of the electronic companies have said that they're not going to take materials from DRC, which is not politically stable and also not clean. So that's why we like cobalt. Fortune is the number one pick there. The second one is Global Energy Metals, much smaller company, $12 million market cap. They have two early stage projects. Both have resource estimates, one in Ontario, one in Australia. They have started drilling in the Australian project, and we expect to see a good increase in resource from that project alone. So we see a good upside from this story. So those are the two cobalt stories. Moving on to zinc. This is why we like zinc. This chart, and then the chart, the yellow bar, which shows the supply deficit. This chart kind of shows that the market is expected to be in a deficit this year, which means that zinc still have room to go up, or at least we expect it to stay the same for the rest of the year. Second chart, why we like zinc. Inventory levels are at record lows, which is always good for a commodity when you're looking at if you're expecting the prices to go up. All right, the first pick for zinc is Foran Mining, again an advanced stage project in Saskatchewan. They are just 100 kilometers away from the world-class Flin Flon mining camp. The beauty of this company is that Hudbay, which dominates the area, 2 of their 3 mines are going to be shut down in the next few years. Foran is the most advanced project in that area, so we think it could be a good acquisition target. Last month, they announced a deal with Glencore, where Glencore will help them advance to a feasibility study. So these are good developments for any junior, which one should be looking at. Advanced stage, I mentioned, they have a negative cash cost of 37 cents per pound zinc, which means you sell you sell zinc, and the remaining revenues from the remaining metals are kind of offsets the cost associated with the recovering zinc. The next one is Hannan Metals. It's a very underexposed company. They have a project in Ireland, strong zinc grade, brand new company, 12 months old. They just came up with an initial resource estimate, and the recent drilling results they have announced shows that this resource could be significantly expanded. So this is a story that we really like, and we also looked at the multiple of zinc companies and what Hannan Metals is trading at. It's trading at 0.009 per zinc equivalent pound versus the average of 0.023 per pound. That kind of shows how undervalued the story could be. Moving on to copper, again, same like zinc. This is why we like copper. Supply deficit again this year. So this should keep copper prices strong this year. Again, if you look at the stock levels, record lows. The last time it was at so low, the copper prices were around $3.54 when the US dollar was weaker. So if the US dollar continues to weaken, we're going to see more upside on copper prices. One more chart why we like copper. Zinc, the average recovered grade has been decreasing every year. If you can see from 1990 to the current, the average grade of copper has decreased from 1.6% to the current 1%. And over the next 10 years, it's going to decline to another by 25%, which means that prices have to be strong over to $50 a pound, which we think to make it attractive for copper juniors. Number one pick in copper is Trilogy Metals. Most of you may be familiar with this story. One of the best copper projects in the world with high grades, over 3% copper. And they have 2 projects that combined have about 11 billion pounds of copper. Now you may think, why is it still not advanced to production? There's only one challenge. It's in the Ambler mining district. There's none of the projects there have been produced yet. There has to be a road connecting the district to the highway. And last year, the Bureau of Land Management in Alaska started permitting this road, which means that if that comes through to fruition, this project could go into a different level. The founder of this company is also the founder of Nova Gold, Rick. Next story is Quaterra Resource. Again, one more Alaskan story. They have a project next to the Pebble deposit, world-class, huge deposit. And they also have a project in Nevada, good copper grades, PEA completed on the oxide, and the market cap is just $14 million. We think on an enterprise value to pound basis, this could be an undervalued story. Chilean Metals is a very early stage company. They have projects in Chile and Nova Scotia, early stage. But the beauty of this is the project in Chile is next to one of the largest deposits in the world, Candelaria, which is, and they also have a 3% NSR on Tech's project, which could be advanced to production shortly. We think the valuation of just that 3% NSR is $21 million. And the market cap of the company is just $6 million. So currently the market is assigning zero valuation on any of the exploration upside on these projects. So that's about copper. Now moving on to gold and silver. There is a lot of speculation on is the cryptocurrencies taking over gold. I think that could happen over the long term because cryptocurrencies is a good payment processing system. It may be, gold being an $8 trillion market. If cryptocurrency gets, maybe 10% of the market, you're looking at 800 billion of the market cap of the entire cryptocurrency world. Right now, cryptocurrency is at about 400 billion. So there's still room for crypto to go up. But I think gold being physical, it's safe. You can see it, touch it. People are always going to like gold. Number one, this is a cash flowing company. It's one of the largest gold processing companies in Peru. Over $100 million in revenue, profitable operations, been around for many, many years. Highly overlooked based on multiples. It's clearly an undervalued story. Most importantly, they're going to come up with catalysts, which means that their production growth is going to be almost 20% or in the coming 12 months, which we think is going to reflect good on the stock. Corvus Gold is one of our favorite gold projects, advanced stage projects. It's in Nevada. Strong management team, ex-Anglo Gold, high management stake in the company, which means skin in the game. That's good. They have a cash cost of $625 an ounce, which is always good to see that. And right now, they have an advanced stage project in Nevada, as I mentioned. They recently acquired a project called Mother Lode, close to it, and they're delineating a resource there. Drilling results nearby on that project, past few months have been extraordinary, and we think that two projects combined could be a good district level play for the company. Again, a good play to be looked at. Kerr Mines, low capex, high grade gold project in Arizona. The capex we think to put it to production is under $30 million. This could be producing around 60 to 80,000 ounces of gold a year. Historic producer. What I wanted to look at is the 10 grams per ton. That's phenomenal gold grades. So that should reflect in low cash cost. Good management team. And again, one thing you want to be looking at is two individuals, chairman and the CEO, 34% of the shares they own, which is strong skin in the game, and that's kind of the stories you want to be looking at. The next story is East Africa Metals, Ethiopian story. Why it's unique is this company in December got a permit, the first time by the Ethiopian government to start mining in the area. The project is advanced, they have a resource estimate, high grade, and the company is going to just take it to advance it to production. They already arranged development financing, and they just did a $30 million equity financing. So all placed, well capitalized. This is the story you want to be looking at. Eskay Mining, very early stage. Just like what the name says, this project has a huge land package in the Golden Triangle of BC. Most of you may be familiar with that area. Why it's so good is it surrounds the Eskay Creek mine, which was operated by Barrick for 20 years. That's one of the highest grade projects or mines ever mined. And this company has land holdings surrounding that. Next to it is Seabridge's project and who's that? Pretium's project. And Pretium recently advanced their project to commercial production. So all in all, the valuation in the area is going up, and this company has started exploring the area in further. And management, again, 18% of the shares, which means it's they believe in the story. So that was the gold companies. Next is the PGM. As I mentioned earlier, palladium has been something that's done extremely well, 100% up in the last 18 months. Very few PGM companies out there. And the one we like is New Age Metals. It's been around for a while. The River Valley project, it's 100 kilometers from Sudbury. They already have a resource identified of over 3 million ounces of PGM. Now the beauty is it's trading at under $3 an ounce, while most of the PGM companies trade at over $10, $15, and if you're a producer, you're trading at $100 an ounce. Company is aggressively exploring the area, and we think, like the other companies I mentioned, this has a strong upside on the resource side. So a lot of catalysts. That's one thing we look at all the time is company has to give excitement to investors. This is a speculative industry. You want to keep investors excited, so consistent press releases, that's what gets the management motivated as well. So those are our top stories, and these are 3 stories that we just started watching, and I put them in a separate sheet because they are unique. On the right is White Rock Minerals. It's an ASX listed company. We don't cover any other ASX listed company, but now with the advancement in technology, now anyone can invest in any exchange you want now. This project, 2 assets, one in Alaska, high grade zinc. The second project is in New South Wales, advanced stage project. They are starting a feasibility study on it, and the market cap is just $13 million. We will be initiating coverage on these companies shortly. The other company you want to look at is Guyana Gold Strike. Guyana is a well-known area for gold mining. This company gets royalties from the artisanal miners in the area. They also started drilling in the area, which means that they could potentially upgrade the historic resource to 43101. As I mentioned earlier, news flows are going to come from this company, which is why I want you to start monitoring it. And then as you see more results, that's when you want to get a more deeper look into it. The third company is Fire Steel Resource, Finland. Already built facility, fully permitted, and an ounce of 0.6 million ounce of resource. They can go into production in 6 months. Again, another story that you want to be looking at because the market cap is just $7 million. So there are so many gems out there that nobody really knows, but my job really is to look at hundreds of companies on a daily basis, make a spreadsheet, and kind of figure out the ones that may not be really exposed, and look at the valuation and start initiating those companies and get it out to the investor community. Hope that helped. We have a booth further down this room, so feel free to come by, pick up sample reports. We'll be there to answer any questions you have, and enjoy the rest of your show. Thank you.